Hello everybody and welcome back to another video. So I just wanted to show you guys my intraday bread and butter model. And the reason I want to show you guys this is because a lot of you guys seem to not have a model yet, and I realize I'm just going to introduce my bread and butter model. That way whenever I take a trade, you guys know exactly what I'm doing. And so what my intraday bread and butter model pretty much stems from is from the daily cycle to 90-minute cycle. And so when you use your indicator of any sort with quarterly theory, or you can just honestly look at your your quarters of the day to your quarters of a session. So usually my preference is going to be between London and New York AM session. So I usually trade New York AM session, so I'm only pretty much paying attention to London high. So how this model works is pretty much, it's very simple. It's a 3-step process pretty much. Step 1 is you just look for an SMT with London high. And so that's why you always see me marking out London high. Right? And so if once you get that London SMT on the high, you're going to be looking for a 90-minute cycle SMT on the high. This can form either during the higher time frame SMT, which is London high, for example, or it can occur afterwards. Either one works. Is as long as you have a lower time frame cycle SMT on one cycle directly below the higher time frame cycle, as long as it occurs during or after the higher time frame cycle is creating the SMT. And so here, let's say we have another SMT right here on the 90-minute cycle. And so from here, once you have that 90-minute cycle, all you're doing is you're just looking for your true market structure shift. So let's say there's a fair value gap here, that there was an old swing point within, it gets inverted. And then once that inverts, you can pretty much take the trade and put your stop loss at the lower time frame cycle high. So in this case, this trade would pretty much look something like this, right? Normally what I like to do is I'll execute on the SMT of the lower time frame SMT in itself using a even lower time frame to confirm it. But I think this is honestly the safest way. And once again, this is my intraday bread and butter model. So once the high of London creates SMT, you're looking for the high of a 5-minute SMT, which would be 90-minute cycle. And so you just refer to that. Once that occurs, you're looking for a true market structure shift. Usually it looks a little more like this, to be honest, where the cycle low is way lower. And so what you're going to be targeting here is once you're in the trade. So let's say you got in around here and there's an inversion for value gap up here, right? So let's say you got into the trade after a true market structure shift occurs. This is going to be your risk system now. And so once that inverts, you're putting your stop at the high of that SMT, of the lower time frame cycle SMT. Then you're going to target your previous 5-minute low or previous 90-minute cycle low. So if this is the low of this previous cycle, then you're going to target it, right? Because this formed between Q3 and Q4, right? And so when you're entering, you're going to be targeting Q3 low. So that's going to be your first take profit. So TP1, right? And then once you hit take profit 1, you're going to move your stops to break even from that point on, right? Just make this a little clearer here. Move stops to break even, and then you're going to target the previous quarter low of the higher time frame cycle. So that in this case would be London low. And that's why a lot of times you'll see me targeting London low as well. And that just stems once again from my intraday bread and butter model. And then from there, what I like to usually do is leave my stop at break even. And if the higher time frame makes sense, then I'll leave a runner. Otherwise, I will just full close at the TP2. And so that's why whenever I drew that old schematic for you guys, I tell you guys, doesn't this look familiar? Where you have a higher time frame key level, SMT on the lows, you're going to have some sort of other SMT on the low here. It's usually formed by two legs. This is going to form your clean expansion. So you have a higher time frame key level. Usually I just refer to fair value gaps or new week opening gaps if possible. And once again, you'll have your TP1, TP2. So now there's context behind why I'm targeting those. And now you understand, right? Vice versa, this would be if you're looking for a long trade, right? Once we create an SMT with London low, then you're looking for an SMT with the 90-minute cycle low. Wait for that true market structure shift. You're going to be targeting that TP1, which is at the previous 5-minute cycle low. And then TP2 is London low because you had that higher time from SMT. This is applicable to any cycle. It's just this is the best setup that I found personally for intraday. And it is extremely high win rate. You can back test it. It is extremely mechanical and it is extremely, extremely effective. So I definitely urge you guys to back test this. In the case that you see price has driven out the Q3 low already, then don't take the trade. If TP1 has already been taken, do not take the trade. Just wait for the next opportunity. So I hope this, gives you guys direction. This is literally my model right here. So you can literally just copy it, paste it, and you will literally see me doing this on every time frame pretty much. But I want you guys to practice on the intraday level first, because when I use this on the weekly cycle, I'm trading intra-week on my personal. When I do this on the monthly cycle, I'm doing this as a swing trade. When I do this on a seasonal cycle, for example, I'm doing this as a multi-month trade, right? So I want you guys to get comfortable with intraday trading first, because this is what we're here for, right? You guys are trading prop firms. We're here to trade intraday. Later on, I'll introduce the microcycle, but for now, just stick to this and build up your discipline to follow this. It might not form every day, but you will have very high success rate with this model right here. So I hope this was insightful, and once again, backtest it. And yeah, I'm going to leave this here and I'll make a more in-depth lecture on it as we progress in the mentorship. But right now I just really needed to get out a model for you guys to copy, because this is my bread and butter. This is probably my favorite model right here. So yeah, just copy it, paste it, backtest it. See you in the next one.